Welcome to readtheticker.com. We're going to have a look at bank stocks. In front of us we have the XLF. Now we've had a little bit of a cause, bit of an effect. Now what we do know, the people who have accumulated down here, they are in a winning position up here. So that's the first concern. It's always hard to start investing when you know the market is already green, because quite frankly they could be selling. We've had this very large volume here to get it up. It's actually too high. High volume in a bar like that is much better when it's off a low, because you know it's demand. Here we're breaking into new ground, so it might be a bit sympathetic because it's busting a lot of stops. But we also have the situation here with a high volume bar and it's gone down, but the good sign is hasn't done any damage yet. We've had high volume on a down bar, but has yet to do any damage. So the question is this distribution further weakness to be considered? Is this the big boys selling so to scare off the weak hands so they can accumulate? Or is this the big boys selling knowing further well that there's further weakness coming out? We'll just scroll down here to the pointed figure. As we can see here, this is a short-term pointed figure. This downswing here, this red bar shows the volume in it, and this is the net volume. As you can see, this red bar is extremely large. The blue up bars are winning during the period of accumulation and market advance. So here's the market advance. And now the red bar starts to win. That's always a concern. So what we need to do is to see supply stop. We need to see demand come in to defend 22.86 to know if this is going to go higher or sideways. So that's the sector. We've seen some, just to summarise the sector, we've seen a markup. We know people are in a profitable position because it's gone up, they've accumulated well. For example, they accumulated here. But are we being hoodwinked? Because the stock has, the ETF has gone up rather fast, which does attract short sellers, and it does attract people liquidating their positions for profit. So that's the sector. Now let's have a look at an individual stock, BAC. Now BAC is a good example. I'll scroll down to here. This is a daily chart, much wider range. Well, let's have a look at a previous example here. We had a situation, we had a bit of a base, a bit of accumulation, a cause and effect. But if you notice how fast it went up, and then it pulled back all the way to previous, or to support, because it went up too quick, and all the volume slowed it right down. It's very similar to what happened here. Cause and effect, but very, very fast. And we know the news that got it up here was probably or possibly what Trump was going to do to Dodd-Frank and what have you. But as we now hear that if you're doing the fundamentals, that tax reform could be some time off, especially after the trouble with the healthcare bill. And you also learned that Glass-Steagall is still in the works, so what have you is going on. Plus the rate hikes were not going to be 4 as they expected, might only be 2, which means a tighter spread on the interest rates. So if we're doing a Wyckoff analysis, I would suggest we go to the chart here. We have very high volume in 2 areas here on the upswing. In fact, it's too large. Explosive upswing volume. Look at that massive volume. Haven't seen volume like that for a long time. That is a bit of a concern. Some people actually selling on that upswing, and as I think the data showed, the insider selling has skyrocketed. What's even a more concern, you have this high volume period here, but it doesn't go up very far. It goes for a little bit. We get a consolidation. Let's have a look at this, so we can actually say that point there is preliminary supply, and that could be this bar here, could be actually the buying climax there. The sideways pattern, bit of an automatic move here, and we get a breakout here, but look at the volume drops off. Just goes sideways, nothing. People start to sell. This could be an upthrust after distribution. Whoops. These are my D ones. and then we get this rather large high volume sell down back to where it came from. Now if this was strong demand, it would have stopped at 24, but it kept on going, and we'll have to wait and see what happens at 24 to go to 23. So at the moment we do know there's been a cause and effect which is profitable. So, it's been used to sell into, and some suppliers come in here. So if demand is controlled and this is a continuation pattern, we want to see defense of this price, and we'd like to see a base move sideways across. If not, we could be heading lower until we do find demand. My guess is that they'll probably bust stops, because this isn't the game for children. They'll go and bust stops and try and shake everybody out who try to get into the rally and take it down to 20 bucks and accumulate down there and see what happens. Just like they did down here. Got in too quick, made all the headlines, and all those are accumulated here. Sold up here on the rally up, those ones are good, and then they reaccumulated here for a longer rally. In fact, most of the sector does look like this, so if you are thinking about taking a short position, White Wells Fargo looks the most weakest stock because it never broke out. And I would be watching bank stocks, and obviously if bank stocks goes down, that's been bullish for gold because it's an inverse correlation. Short answer, the bias is for bearishness in bank stocks, and if the defense is weak and it breaks 22, any bounces to recover would be shorts, and your target would be, I don't know, $17 as such. Thanks for watching.